Hey there traders, welcome back for the David Robinson edition of the StockBandit.tv episode number 50. It's always great to see you here. So after the huge market correction that we've seen since the October 2007 highs, a lot of stocks out there have taken some very big hits. Former high flyers are now more like knee-high to a grasshopper, and many stocks simply do not make the moves that they used to make, especially when you compare the average true range. Take a stock like Citigroup, for example. This thing used to move an average of about $2.50 on an average day. Nowadays, it moves an average of 41 cents on a given day. So clearly, the trading ranges have contracted, but in many cases, we've seen percentages increase to correspond with that. Now let me do some explaining. Let's take a look at Citigroup. I'll show you exactly what I mean. Back here on January 5th, for example, of this year, this stock had an average true range of about 75 cents. Now on this particular day, it was only about a 1% movement from the previous day. Now today, this stock actually moved up 76 cents, which represented 25%. So it's obviously moving much more on a percentage basis nowadays than it did even just a few months ago. And that's just one example that we're seeing out there. There are a sea of stocks out there which are either in the low teens or are now single-digit stocks. And it used to be that I just didn't trade single-digit stocks. With so many other stocks out there making bigger point moves to choose from, it was simply cheaper for me to trade fewer shares of the higher-priced stocks, since I pay commissions on a per share basis, meaning I pay only for the shares that I trade, not a flat rate for each trade that I make. After all, on a per share commission pricing plan, picking up several hundred shares of an $80 stock costs a lot less in commissions than it does to trade several thousand shares of an $8 stock, for example. Now, I'm still on a per share commission structure because I do prefer that format, but with so many single-digit names to choose from nowadays, especially which happen to make huge moves on a percentage basis compared to what they used to see, case in point, Citigroup, I have been trading them far more often. You know, some of the financial stocks like this one, Citigroup, Bank of America, Wells Fargo is another one. A lot of those are making big percentage moves. A lot of solar stocks lately have been making big percentage moves. Stocks like Trina Solar, CSIQ, take a stock like SOLR or SOLF or JZO, LDK. Some of these are making much bigger percentage moves than they were just a few months ago. And oftentimes those percentage moves that we're seeing in some of these smaller, cheaper stocks are really outpacing the moves that some of the higher price stocks are making these days in terms of percentages. Now, when it boils down to it, the percentage move is really where it's at. Comparing dollars at work in one trade versus another, the bigger percentage move is the one that I want as a trader, even if I have to pay more in commissions to catch it. So don't exclude single-digit stocks from your radar. It really might be costing you some opportunity right now. All right, thanks for joining me once again, and I will be back soon with more videos, but in the meantime, trade like a bandit.